Once you're ready to invest and you've got lots of money burning a hole in your pocket, you've then got a really important decision to make, and that is Ferrari or Lamborghini. Only kidding, we're not quite there yet. But we will need to work out what we're going to invest in, which funds, stocks, shares, bonds, REITs, you name it, where we're going to put our money to maximise returns over the next 10, 20, 30 years, completely depending on our own personal financial goals and time horizons. When looking at Vanguard's platform in the UK, for example, there's 76 different funds on the platform that we need to look at and work out where's best to put our money. But don't worry, we'll break them down into different categories and then hopefully by the end into smaller little chunks so we really understand what we're getting ourselves into. By the end of the video, hopefully you'll understand what the target retirement funds are, what the life strategy funds are, how the different funds are some actively managed and some will be passively managed, and also some of the fixed income and bonds too. And also learn a little bit more about how to read the information on the website and how to really understand what the fees are, where your money's been invested. So without further ado, let's dive straight in, get your tea and coffee at the ready, and let's go. So as we just mentioned, when you go onto the Vanguard website, you'll see when you go to the all funds section that there's 76 different funds that you can invest your money in. Now, the Vanguard platform in the UK doesn't have any fancy app or anything like that. Now, I know over in the States they've got a fancy app, but like I've said in many videos before, we just can't be trusted. There are, of course, a lot more Vanguard products out there in the wild, and you might see them in your favorite different trading apps and Free Trade, Trading 212, Hargreaves Lansdown, but on their platform directly, these are the ones that you can access using your pounds, and these are the ones they let you buy directly from them, but there are plenty others and you're very welcome to go out and buy your favorite Vanguard fund through your favorite broker who you've already got an account with. But for today's video, we'll just be focusing on the funds you can buy directly from them on their website to keep things really, really simple. So let's start right from the top. If you see, you go on their website and you go to the all funds section, we'll see we've got 76 different funds we can invest in. Right at the top, we'll see that there's 17 blended funds, and really simply, we'll see that these funds are just a blend between equities and bonds. So in really simple terms, it's just a mix between bonds and shares. The 17 blended funds really are just a mix of three different things. So you've got your life strategy funds, your target retirement funds, and then a really lonely, globally balanced fund, all on its own sum. If we start looking at the life strategy funds to begin with, I've done an entire video going through these in some more depth, but very, very simply, they're a collection of 5 different funds with different mixes of equities and bonds, all the way from 20% equity to 100% equity. And then of course, we'll discuss why you might want to choose different ones moving forward. This could be everything from where you are currently in life, how old you are, how much risk you're willing to take, but everything really is down to your own personal circumstances. And as I'll say time and time again, please do make sure you get plenty of help from a qualified professional, unlike some dude on YouTube. But without going into too much detail and covering off what I've already covered in a previous video, effectively, as you get older, the concept is that you'll choose a larger percentage of bonds rather than shares, because bonds tend to be a lot less volatile and you can get a bit more of a guaranteed income. And of course, you want to protect your investment pot, especially if you're going to be drawing 15, £20,000 a year, for example, from that pot to live on. So by using bonds, you're effectively protecting that asset and making sure that you can draw from it whatever you intend to draw, whatever you want your income to be, depending on the size of that pot. Now, of course, over long periods of time, stocks and shares outperform bonds massively and have done throughout history. However, year by year, it's very difficult and impossible basically to tell what's going to happen. So bonds are a really good solid way to make sure you've got a solid investment and make sure you've got a well-diversified portfolio. Anyway, let's dive into one of the life strategy funds now and see whether it's a good investment we might be able to make and see actually what's inside this fund. So first off the bat, the life strategy fund is a balanced managed fund, which means that your fund will be actively managed for you, which when we compare to passive funds means that they will actively balance it for you. And this all depends on the performance of the bonds and shares. So for example, if I dive into the 60-40 split here, where we've got 60% equity and 40% bonds, just in case, let's say in a couple of years, stocks outperform bonds massively and you end up with 65% stocks and 35% bonds, this will get balanced for you actively so you don't have to do it yourself. Remember, when you jump onto the page, you'll see all of the information you need to see. So from a very high level, you'll see the price, the different allocations, the costs, etc. And then you'll also get a risk score, which runs all the way to 7, just to give you a rough guide of how adventurous this investment might be. And again, try and match that up with yourself as an individual investor. But please make your own decisions and do lots of your own research. One of the most important things to look at is that ongoing cost, that third tab on the right. And you can see with these life strategy funds, the ongoing costs are 0.22%, which is very, very low in the grand scheme of things, let me tell you that. To work out the total cost, you're going to need to add that to your global account fee, which is going to be 0.15%. So 0.15 plus 0.22, so it equals 0.37%, which would be your total annual charge, depending on how much you've got in your account. Remember that fees and charges can take a huge chunk out of your investment over the really long period of time. If you up your fees to 1 or 2%, for example, and you're only bringing in 7% a year, you could be losing tens of thousands and even hundreds of thousands of pounds over a long period of investment. So please make sure you understand fully how much your ongoing charges are. We can always look at past performance on these pages too, but remember the golden rule of investing, that past performance doesn't dictate what future results we might be able to see. So although it might be comforting, it's more important to think long term and think about the future and look at what it's holding to figure out what might happen in the future. So that leads me on to the most important section, in my opinion, really, is trying to look at what's actually inside the portfolio and work out where your money is actually invested. So if we go into this section, then we can see how the fund is weighted. Weighting just basically means that, for example, if we had £100, how that £100 is spent would be shown in the chart here. So for example, we'd have £19.40 would go into that global bond fund, and £19.10 would go to that developed fund, and so on as we move down that chart. Essentially, the Life Strategy Fund is a collection of funds. So your money will be spread amongst those funds, and then within inside of those funds, of course, is different companies, different makeups around the world, which will give you a really nice, well-diversified portfolio. In theory, the Life Strategy funds are kind of meant to be that one-stop shop that if you were a beginner investor or even an experienced investor who doesn't really want to spend any more time on your investments, is to choose a fund like this, let Vanguard do the rest of the work for you, and you just have to sit back and make sure that you consistently invest month by month. Anyway, enough on that one. Let's jump now into the Target Retirement Fund. Now, the word retirement is very alien to me, and if you're anything like me in your 30s, retirement seems a whole nother lifetime away. But we all know it's going to come around a lot sooner than we think, and if we don't save and invest now, we'll never be able to get that Lambo and impress all our friends in the retirement village. The Target Retirement Funds are really similar to the Life Strategy Funds in that they're meant to be that one-stop shop for you as an investor to get a globally balanced and diversified portfolio with a single fund. The concept here is that you pick the year roughly approximately when you'd like to retire. You can't just pick an early one and retire early. You'd pick one which is more realistic, maybe toward your 60s or 70s, for example, and then Vanguard will do the rest and balance it between equities and bonds. And as you get older, it will increase the amount of bonds in that fund and reduce the amount of equities. Again, the theory goes that the further off you are from retirement, the more equities you'll have, the more shares you'll have, because you'll get higher returns from those. But of course, as we get closer to retirement, we want to make sure that we protect our assets and reduce our volatility. So we'll use bonds to make sure that we kind of weather those storms and weather the ups and downs of the stock market. For example, I'm 32. My God, I'm getting old. Which means I would choose the Target Retirement Fund around 2055. So this would give me a split of 80% equities and 20% bonds to try and go for that more aggressive, more adventurous growth, because I've got many years in theory to make sure I weather the storm and ride out that roller coaster of the stock market. But anyway, make sure you read all of the information on those pages. Make sure you read the key investor information document. That's really important. And then also look at the fees. And you'll see here on the fees side, they're only slightly higher than the Life Strategy Fund. So you've got 0.24%, which in all honesty, guys, is very cheap and cost effective compared to in the past what some people have had to pay. Anyway, remember, I'm not a financial advisor at all, and I would never pretend to give out financial advice. So please make sure you do all of your own research and seek help if you need it. So now onto the equity section, and that leaves us with 33 different funds to have a look at. Now, I definitely haven't got the time to go through 33 individual funds, and you'll be extremely bored anyway, but let's give them a quick rundown and give them a quick overview now. So these I think are somewhat much easier to understand. So on the Vanguard website, firstly, they're broken down by region. So for example, if you wanted to invest in the world, if you wanted to invest in Europe, if you wanted to invest in the US, it's really nice and simply broken down. And then of course, within that region will be different funds. And then within different funds, there'll be different kinds of investments, whether that be smaller companies, larger companies, for example, those kind of things. As I mentioned too, of course, you can just own the world, which a lot of people choose to do. And again, you can just have that single fund, own the world, rather than trying to bet on individual regions, might be a good strategy. So rather than going through the individual funds, I can try and give you some pointers though to help you along the way to try and make better decisions, certainly. So of course, always pay attention to fees. That's one thing I'll always keep saying. Fees really matter, but luckily Vanguard are pretty low on their fees and one of the things that stand out on their platform. Secondly, you want to see what region you're invested in. as I just mentioned. Thirdly, you might see some funds which look almost identical and you're trying to work out the differences. Now, if we have a look here, you've got the FTSE Developed Europe Fund, excluding UK. We've got two funds here which look almost identical. Now, in reality, there's just a couple of differences which might be hard to spot. So for example, the only real difference is one pays you a dividend and the other actually accumulates for you, which means that rather than paying you that dividend and you deciding what to do with the cash, that dividend is actually reinvested into the fund for you. So unless you actually need that cash, it probably might be a good option for you. And also worth noting that some are traded as ETFs and some are traded as funds. Now ETFs are of course just traded in the stock market, so price will fluctuate every minute of every day, whereas funds are just priced on a daily basis and traded on a daily basis at a single point in time. And of course, funds can be broken down as many times as you need to. So for example, if you're putting £50 into a fund, you'll get exactly £50 worth of that fund, whereas on an ETF, you'll need to put whole numbers in depending on that share price, exactly as you would another company. Remember, there's no right or wrong way to do this, but just be aware of all those different things. Dividend and accumulation are things that come up all the time. And if you don't want to worry about looking at your investments and balancing them, this might be a good way to go. And of course, accumulation just means that in theory, you should make more of your money because of course, compound interest over many, many years is doing justice for you and working there in the background, which should give you greater returns over a long period of time. One thing also worth noting is check those costs and minimums. So there might be minimum amounts that you need to invest in these platforms, whether that's lump sum or monthly payments. So again, just have a little read through, work out what might be best for you, and then make your decision from there. So now we're on to the next section, which is fixed income and bonds. I won't touch on these too much detail, to be honest, because they're really, really boring. But effectively, there's 25 fixed income bond products here on Vanguard's platform. I have done a whole video talking about bonds. I've tried to make bonds as exciting as possible, and I've put in many James Bond 007 references. So if you do want to have a look at that one, have a look on my channel and you'll find the bond video I did recently. So bonds and any other fixed income products can be really, really good and can be a really nice way of balancing out a portfolio, and certainly have been useful in times past. But in the current climate that we're in, with record low interest rates and record low bond yields, it's very, very hard to recommend or even suggest why they might be being useful, especially because a lot of bond yields won't even protect us from inflation. So effectively, there's got to be some much better ways to invest our money. But make sure you do all of your own research on this one, just my opinion. In summary though, bonds will all have different credit scores. So if you look through some of the information, you'll see ratings like AAA, AA, BBB, for example, and they go all the way from investment grade down to junk bonds. Junk, as described, are a load of junk, and there's a high probability that they won't be paid back, and although it looks like they're going to pay a big high yield, they might default and you might not get any money back, so just be aware of that. Remember that all bonds are is just lending people money, so you're either lending governments money or you're lending companies money, and in return for that money they're going to give you an interest rate, and whether you should give them that money depends on how creditworthy they are, just like you would do your mates. Just as a bonus tip, there is a high-paying all-world dividend ETF on Vanguard's site, so if you just search that one out, it's actually paying a 2.9% dividend at the moment, so it might be a good way if you are looking for a fixed income. Okay, we've made it to the final wrap-up point, so I really hope you found the video useful. Thanks so much for staying to the end if you have. If you have made it this far and you want to write a random comment in the comment section or a random joke, please feel free to do so, because it will confuse everyone else and they'll have no idea what we're talking about. Anyway, if you've got any questions, let me know. Otherwise, I'd love to know what you've chosen to invest in, what your portfolio looks like. I do have an account on Vanguard, which I use for my stocks and shares ISA, and I am probably going to build it up a little bit more because I really like the fact that the fees are extremely low. And in the long term, I'd like to use this as my dedicated stocks and shares ISA platform. Anyway, do all of your own research. Remember, I'm just some guy on the internet. I hope you've enjoyed the video. Drop me a like if you have, subscribe for more, and I'll see you probably just in a couple of days into the next one.